All right, all right. Good morning, traders. Happy Wednesday, everybody. Welcome to the middle of the week. Good morning, Michael. Good to see you, sir. Good evening, Sandy. Bob, glad to have you. Good morning. Good luck again as you go to your procedure. Good morning, Perry. Awesome. I think everybody is on audio on, I think. And good morning, Graylin. Fabulous to see you. Love it. Great energy. Appreciate it. Welcome, everyone, to the Market Watch Group midweek check-in. It's Fed Day. Good morning, Greg. Good to see you, sir. It's Fed Day. We've been talking about it for weeks, right? It's always funny when you're keeping an eye on it, and then boom, you're like, wait, here we are. Fed Day today. So no expectation for rates. Definitely wondering what we're going to hear by way of verbiage. So we'll look at that. We'll talk about that. Here are the disclaimers as always. This is educational, illustrative. We're not advisors. We're not brokers. We don't give guidance. We don't give recommendations. Other than that, let's all do our very best to make money in the market. Here's the agenda. We'll start with today's opening analysis. What are the futures doing? What did yesterday do? How does it fit relative to our market posture? We'll take a look at our market posture and see if it's holding up. We eased a little bit in our scoring, but remained bullish and still had every expectation of markets bouncing and wondering if we're going to get that. So mindset for any open trades. And remember, this is an open offer. It's with a group setting, we all learn better with shared knowledge. So when people are willing to share trades, if you're in a trade and we're looking for a guinea pig trade, if you're willing to share it, right, maybe you get a little bit of guidance you were looking for, where to set a stop, when to take some profit, where your final exit may be, anything like that. Everybody else learns from seeing a live example, and what the possibilities might be. So I would love to include that more. So as we're ever going through trades, if you're in one, especially as we're going through the watch list, and you're like, I'm in that, what, we can talk about it in a little bit more detail. Keep that in mind. Open offer. We'll look at our watch list, see how things look, what we have that's potentially setting up. We had a number, but it's kind of leading to this. So if the market likes what it hears, we could definitely vault out of this into the next leg of momentum. And so you definitely want to be thinking about how are you going to trade if that's what happens. Additionally, other than them coming out and saying we're not going to cut it in 2024, which I don't see them doing, I don't see the market going into any kind of like a sell-off from the Fed, but I guess we'll see. Certainly there's a lot built up around it, and so that just sort of builds that kinetic energy. Like as we get closer and closer, it's like somebody's pushing a spring together, right? And it's when you let go of that spring, it's popping, but which way? It's hard to know if which way it's gonna push off and explode. That's the metaphor I think that best describes situations like that. And then we'll finish with trading plan progress of the week. So let's dive in. Let's see what we have going on. So you can see that, we had broken down. We had some increased volume for the sellers. So there was a couple of things last week that had us say, whoa, right? We also acknowledged the fact that even though we had been in our trend, we really hadn't been to the top for a while, and that it started to just sort of veer off of that high. And then we broke it down underneath it, and all of a sudden you're like, yeah, when you look at what we've had for the last 2 weeks, you start to realize, well, wait a second. Things have turned a little sideways. There's still efforts made to push and to pop a little bit, right? It's making a bit of an effort to even then sense that. So the question's going to be, can we get out of this, right? Can we get out of this and back into this? That's what's going to be happening over here. And from a cyclical standpoint, the second half of March and April are statistically two of the strongest months. It's hard. Like for me, the way I'm processing that, I'm thinking to myself, it would be, really hard when we're showing as much strength. There's expectations that full year GDP for 2024 are going to get pushed from 2.7 to 2.9, I believe is what I saw. May have been 3.7 to 3.9. Does anyone know? 2.7 to 2.9. Which, interestingly, the increased growth is being attributed to increased illegal immigration. So certainly we have an immigration problem and need to control the border better, but immigration promotes growth. So you kind of have to have it. It's an interesting situation. But the fact is that there is economic strength. Jobs are good. Growth is strong. Corporate returns have been strong. Like there's been no aspect of it showing weakness. So the only concern we have right now is the Fed's biggest concern, and that is, not allowing deflation to pervasively persist in 3% range. They want it into the 2% range. So there we are. But this is what I'm thinking about as we come out of this is are we going to break and see things reinvigorated? Remember, the other thing we were talking about is the VIX. If you missed it last night, we did an option course on selling, covered calls, and cash secured / naked puts. And they we actually added a filter to our watch list to sort for volatility. So give me 1 second here. I gotta it was a good one. If you missed it, we talked about premium and the mindset of options more from an income standpoint, right? It's not like I'm looking for big swings. It's looking for steady Eddie type analyses. Okay. Let's get to the VIX. Now the VIX is kind of slightly up here, but you'll notice that we did indeed And it's a tough VIX environment, I will tell you that. So if you were like, hey Scott, do you find that the VIX is this hard to read consistently? I would say no. And it's not like that it's that hard to read. It's just kind of it's choppy. It can't seem to find a consistent direction, but it's doing it under 16. So it's like it's interesting to me because it's overall low. It's hard to ever be not bullish when your VIX is under 16, as I said, because when you say, well, historically, this is where we are. And when you look back, you're like, wait a second, our highs are previous lows. Like this is a pretty good place to be right here, as low as we are. But when you're in the weeds of it, it still can be a little bit more difficult. So what's happening? Well, we were looking for that was escalation. That was a higher low. But this is a high, and this is a lower high because you can see it went up and then it turned back down. And that would be de-escalation. So we kind of have what? A triangle. And a triangle, if there was ever like different fields of technical analysis study that you might consider, meaning different Elliott wave is a different style. You have oscillators, you have trending indicators, you have things like that. But here what we have are price patterns. So things like head and shoulders, inverted head and shoulders, double top, double bottom, triple bottom, flags, pennants, wedges, triangles, things like that. I don't know if I've said this recently. I think I've said it before, and I would imagine some of you have this book. My most favorite technical analysis book that every trader should have in their library, in my opinion, is called Technical Analysis of the Financial Markets by oh my gosh, why? John Murphy. I was blanking. I'm like, who wrote that book? John Murphy. That's like the primary book they use in the CMT, Chartered Market Technician, field of study and exam. So, phenomenal book. Sandy said really helpful. Yeah, right. He just does a good job. It's basic concepts of, hey, how do I use this? What do I do with this? What does it look like? Anyways, title again, Technical Analysis of the Financial Markets. Murphy. There's another one called Technical Analysis Explained, and that's Martin Pring, and that's the other core book in the CMT. I don't think he explains as well. I don't like how he writes. I don't know. It was just maybe personal, but that's another one you could look at. Michael said, I had an option AGTI, which was 2 months ahead. Bid went to 0, so I could not sell. Just recently, the bid price went up, made money. So it recovered. Okay. Yeah. Sometimes options get to a point. I've had that too, where it's like, I've had times where it dropped down and it's only had like 10 cents left. And I'm like, you know what? For 10 cents, I'd rather ride it out and just have that one small offhand chance that it recovers. So I basically consider it worthless at that point. And then, yeah, you're kind of like, you ride it off. And then all of a sudden, breathes life back into it, and you're like, "Hey, what?" Yeah, that's funny. I'm glad you got that. So what is our ultimate decision on the VIX? We don't have one yet. This bottom line that I have drawn here caused us to lower our score by 1/4 of a point on the VIX. And we said that this over here will actually raise it back up. So if nothing else happens the rest of the week to change it, yeah, that would nullify this and raise our score back up. The problem is if we pause here and then we go up, Well, then all of a sudden we have another higher low and more escalation. Anytime I have a higher low, my concern is that we're going to shoot. We haven't done it. None of the higher lows that we've seen since December, none of these have skyrocketed. So if you've done hedging, there's a chance you might have some losses, but if you do, they should be small because it also hasn't like skyrocketed either, right? So hedging has kind of been a little bit of a zero-sum game, but I'm always going to, because no matter how much I'm bullish, my score is bullish, everything looks strong, and the cyclical aspect of the market is favorable. Anything could happen at any time. Anything, right? So that's the mindset that has us ready to hedge if we need to. So yeah, if you've been thinking to yourself, the VIX has been a little hard to read, I feel like it's like I think it's going to do this, and then all of a sudden it goes the other way. You're not wrong. And look, it's sometimes indicators on a temporary basis. It's still been fairly accurate in what it's helped do. First of all, in the fact that it's stayed bullish and the market keeps going bullishly, but it has had some whipsaw type signals. There's nothing we can do but just hope it all settles in here, right? So anyways, let me know your thoughts on that. Market's open. Let's go take a peek at our opening range. And you can see we're flat. So yesterday, like on on Monday, we actually gapped up and we had big volume. So we're actually going to get a little bit of a positive influence on our score from this as well. So from what we're seeing being influenced on our market posture score and how it's being influenced, to me, is resonating as more bullish. I'm looking for things to bounce. Unless the Fed is the disruptor, that's what I'm looking for. Give me your thoughts. Are you trading? Are you holding through the Fed? Are you waiting after the Fed to put trades on? What are you doing? And let's look at our watch list. Did I miss anything? Hold on. Let me go back here for a second. Give me a drink of coffee. Okay, we were actually going to look at the futures, and I was just yapping on. Now the futures are live, so let's just update this. And all eyes will be on the Fed's dot plot. Do they still believe 3? Okay, so is that official? I didn't think that they had come out. Yeah, press. I'm actually a little bit. I didn't want to expose my dot plot ignorance, but now that you asked the question, I'm like, what is the dot plot? I need to look into that a little further. I mean, I understand. Maybe it's just what they're calling the organization of their data. Think we should all maybe come back to Yahoo after the meeting and look into that a little further. But yeah, I have to plead ignorance, my friend. Okay. U.S. futures stall as Fed decision day arrives. How Intel won $8.5 billion in chip making cash from Biden. I didn't even hear that too. Ooh, there we go. Did you guys see this? Chipotle, CMG, Burrito Factory, 50 for 1 split. They were getting close to $2,000, and I was like, they got to split soon. Which you don't get any more equity. You don't get any more equity, but they think it's favorable, right? Because a $3,000 stock is going to all of a sudden be a $60 stock. The stock has had an amazing run. Not as much through here, but if you look back, 5 years gonna do it. Let's maybe go a little longer. Actually, what am I doing here? 10 years? Okay, back here to 2018. So about 5 or 6 years back here, the stock was around 250. Now it's up here at 3,000. What an amazing run. I gotta tell you though, if anyone eats there, I used to love going there, and now the quality has really dropped off. Like it's hitting that complacency zone. That's concerning. I'm just saying for me, but the trend looks great. This thing's gonna go through. You can see it's over here. It's not till June. So they announced it, but it's not till June. Um, very interesting. 50 for one. When's the last time you heard of something like that? Amazing. Anything else? Yeah. It's all about the Fed. Obviously, we'll just look at the economic calendar, but that's the only thing we have today. FOMC interest rate decision. Jerry Bear gives his press conference. I sent him a text to wish him luck. I said, put the hand sign up, our friendship hand sign up to let me know you're thinking about me. I don't know if he'll do it or not. We'll see. Thursday, jobless claims. Yeah, Sandy, he was busy. Sandy, he was busy. She said, let me guess, no reply. I mean, you say that not because you're questioning the friendship, but because you recognize he's busy, I'm sure. I appreciate that you recognize the situation. Thursday, jobless claims. The rest of it's minor, nothing really there. Friday, um, Fed Chair Powell takes part in Fed Listens event. Fed Listens event. Does anyone know what that is? Man, that's like the second thing I'm like, I don't know what a Fed Listens event is. I want to go and speak. He's listening. Fed Vice Chair for Supervision Michael Barr speaks. Okay. All right, never mind. There's nothing there for us. Let's get back to the charts. Just a little nose scratch. That could be it. I'll see. You can see that Chipotle already given some back. Because they're like, well, wait a second. It's just a split in 3 months. Like, is that really worth 7% overnight? I don't know. Maybe it is. Maybe. Let's get to the rest of this. Apple. Okay. It got pretty close, right? That was its high. And I said I would like to see it, if possible, get right up underneath, closer to the 50. And it didn't. It only got to about right there. So it's not a V. If you remember when we looked at Google, Google went like this, boom, boom. And this one's kind of, it's trying. It's trying. So if we from here pull back and don't drop back to that 160s, would I think about it, even though it's still going to be under the 50-day? Yeah, I'll think about it. I think, maybe, depending on how other conditions look at that time. But certainly the more we see Apple, we've already acknowledged that Google's back end, Microsoft seems to be accelerating again. So certainly some of these big stocks dropping like this is weighing down the market, hence it going a little sideways over the last couple of weeks or so. But hopefully this unleashes things to start going again. AIG seems to be consolidating again. So there may be a new opportunity here. AMD looked like it was going to give a signal right here, and then it sort of fell out. It fell out, but it still fell right to this old resistance, old resistance, old resistance, old resistance, breakout. Now what? New support, and then looking for it to go the other way. So I would say it's still viable. You could still be looking at this. Implied volatility, kind of high. So this would be something where you might think covered call, cash secured put, bull put spread. Options are going to be a little more expensive on this. So be careful as a buyer, right? If you want to watch yesterday's session. But I would say this is still a viable setup as it sits on top of the 50-day. Amazon, yeah, it's kind of a little sideways here, but it's above the 50. There's been no selling pressure ever more than 2 days at any given time, and it seems to be holding up, but it also seems to be a little stuck, right? If you notice, it's a little bit of almost a basing pattern type thing in here. You can wait for it to break out, or you can trade anticipating the breakout. Michael says, if under 50, wouldn't you wait for a call opportunity once it's at the 50? So for me, the 50 is more incidental, and it's the shift between higher high, higher low, like demand, supply, pressures shifting. But I would prefer it. So like, for example, if we go look at Google, when Google got above the 50, we made note of it, but I said, if it falls back down in here, even though it's under the 50 at the higher low, it still would be a higher low. Now, we didn't get that. It gapped up from some news. And so from here, we're saying, well, when this pulls back, there's a good chance it will be above the 50, which does coincide with your point, right? Like, yeah, I do think it's stronger when it's above the 50. So for example, if you look back here, this first recovery bounce after these lows was still below the 50. And then it popped above the 50 a second time. And then this bounce was also at, but slightly below the 50. And then the third bounce was on the 50. And so that little transition, sometimes it's the first one, bam, like this one now, it might be the first one. Sometimes it might take a time or two. So I'm willing to let it be under the 50. I would prefer that it breaks the 50 at some point. And that's what's different about Apple, right? Is Apple has not come close to the 50 yet. So would I prefer that it touched it or broke it, then gives me a higher low? Yes. That's why I'm saying this one, you would have to say to yourself, if it gets up here and then it comes back here, that's still a higher low. That still indicates that the sellers were strong there, they were strong there, and they were strong there. 3 cycles in a row. 1, 2, 3. Bam, 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 right? So now what we're saying is if all of a sudden, and the buyers were weak, they did nothing. They got 2 days there. They tried a weird after earnings, but couldn't do much there. So what we're saying is now the Apple, if the buyers do enough, and then if that's the next selling cycle, well, clearly that selling cycle is significantly different than the prior 3, and actually 4 if you include this one, right? I mean, you can see how much the sellers were ramping up around this. But now if all of a sudden they don't, that's opening the door for the buyers, and then we see the shift. That's what I'm looking for, is that shift where the buyers do more, the sellers do less, and we think that the tug of war has turned in favor of the buyers. That's the key to what I'm looking for, and it does tend to work a certain way around the 50-day. That's how I would describe it. Hopefully that's helpful. Boeing is still a dog. It's nothing. We're just watching it for shits and giggles, really, I guess. BLDR still looks viable and looks like it's turning from here. Yeah. There's the stochastics making its move. It seems to be bouncing. In fact, I would say this was viable yesterday on this engulfing pattern right here. But still looks pretty good and would probably give us a nice continuation opportunity. So conservatively, you would still put your stop here and then look to move it tomorrow at the end of the day for tomorrow into a momentum trade. Aggressively, Could you put your stop underneath this and let it go and just leave it for the next day? Yes. So yeah, it looks pretty good. BLDR industrials have remained strong. Absolutely. That was on our list, and it does seem to be firing. City. Oops, let's get City. I don't know. City was on Friday, it turned, and it's just kind of a little bit sideways here. That's a tough one, right? It really didn't give a great signal. Caterpillar. If you're in Caterpillar, you've gotten a great trade out of it, and you're probably thinking, ooh, I don't love this. And you'd start selling some. Maybe you got all. This looks like it's turning into a consolidation. So Caterpillar, I think maybe our next trade is down here somewhere. If it stays accelerated above the above the 50. Capital One. Capital One looks close. Options are pretty cheap. Looks now. What's the concern? This is the concern. It's just been going sideways, right? For quite a while. It's still above the 50, but the 50's caught up. So now it's like, okay, I've got this nice stochastics turning. This is it. If this thing's gonna pop out, this is the trade that it's gonna do it on. So it's now where you're gonna wait for it to break out and then wait for it to pull back and there. So your trade is either here or your trade is here after it confirms that it's still bullish. That's the opportunity. So that's viable today. Capital One. ConocoPhillips oil is still kind of pushing. It's not getting much of a consolidation. We'd really like to see the buyers take a break and see what the sellers do. But there's some bullish momentum in here. NCOF, but down a bit. Yeah, I mean it's just kind of getting started, so I wouldn't be surprised, right? Down a bit, down a bit's what I'm expecting when I first enter a trade. You're gonna be down a bit, right? That's just what's gonna be there. Ooh, Costco. So this is an interesting one too, because it's above the 50, and the 50 is just an easy landmark for us, right? And so we dropped hard, and then we landed and fell right on top of the 50. It popped up and couldn't do much. But then when it pulls back, it's also not pulling back much. So it's like these sellers seem to be done, but we don't see new buyers yet. And we're wondering, what's this thing going to do? If it turns up, and you can see this looks fine, but yeah, I don't know. If this turns up out of this, that's a maybe for me. Because I think to myself, that's a great target right up there for that type of a trade. So I'm definitely watching Costco. CrowdStrike. CrowdStrike is knocking on the door for me. I said, as long as it can kind of see the dust settle, this is what I mean when I say the dust settle coming out of earnings, and stay in line with its trend, which it has, then I have a couple of things. I have a nice 365 target, and I have something setting up in here that if I can catch this thing by 325, I've got 40 ahead of me, and I can probably take 10 below me. So maybe a 4-to-1 trade setting up for CrowdStrike here. And you can see that the stochastics actually looks viable. Today's candle's a little iffy, but yeah. Volatility. You can see that since earnings, a lot of the vol has come out, but there's still some. This low is down here in the 30s, and we're at 40. So there's some volatility. Okay. Yeah, I like this too. There's some signals here. The problem is it's like we all get a little, skittish setting up and thinking about trades on the cusp of the Fed speaking, right? CSX. What am I in here? Yeah. CSX holding up on the 50. Industrials, Delta. I was looking for it to pull back. It didn't. So, okay, I'll watch it. Same with that one. The Dow's holding up, but overall sideways. We've seen some of that. We've seen the Dow. Remember what we talked about was that there's just not enough money for the Dow to be raging and the S&P raging. I mean, it's like something's going to start slowing down, and the Dow's very expensive. It's representative of some enormous companies. So, Carnival Cruise, CCL, dun, dun, CCL. Oh yeah, absolutely. You've got earnings press in a week. Your stochastics is pinching. It seems to be holding with this candle. I think you have something here because it has gotten back up. So what would I say? You guys know I'm going to draw a line. As always, I'm going to draw a line of consolidation. That's my consolidation. We clearly got back above that, back above the 50. So yes, now it's a matter of saying, did we catch the turn? So I'd say that's just kind of sitting on the setup. Yeah. Well called out. What's my concern, though? Consumer discretionary has moved into a not lagging, but it's dropped out of that, that top echelon. It's just it's not, the cool kids are at the top. It's like sometimes it's there and sometimes it's not. So I don't know. So that's a concern. That's what hit me with Home Depot. Right? Was it's like, oh, look good, and then all of consumer discretionary got hit, and I'm like, oh hell, took it down. So yeah. But I let's not make judgment until we see that stock. Maybe that's holding up a little bit as well, right? The ETF representation. Ford. It's holding the 50. It's trying again. So it gave a little bit of a false start. Did anybody re-enter coming out of this? That was you had a nice little ability to re-enter. It would be moving. Let me know if you did. Held the 50. Hold the line. Fastenal. That's a tough one. It's not really giving good entries. Okay. Bitcoin. If you're a Bitcoin person, it's setting up. It's not for the faint of heart. It can fly either direction. There's no stock, there's no options on this. But nice consolidation. Looking for a higher low to set up here. GE not pulling back nearly as much. GE's like, you're Bitcoin, you're not as strong as us. Bitco, BITCO. Is that the newest one? How new is that? This is the old one. BITCO, Bitcoin Depot. BTM now, is that right? Bitcoin Depot. Huh. I'm not seeing any options. I don't even see the symbol. Bitco looks like is now Bitcoin generation. iShares Bitcoin. Maybe that. Nope, that doesn't have options. If they have them, I would be worried that even if they have them, they're not good ones. The futures probably have options. BTC. Yeah. Bitcoin futures have options, but look at that vol. It's off the damn charts right now. And like you can't make any money on it because the options are just too expensive. Okay, Bitcoin, we're done with you. Gold staying strong. Google, yeah, Google bounced up, regained quite a bit real fast. We're looking for the next pullback opportunity. There's Home Depot. Yeah, you can see my Home Depot trade that blew apart. Bing. And now it's just kind of going sideways. IBM still looks viable. The stochastics is set up. All we need now is just a price trigger. You could basically say, hey, if it gets back above today's high, I'm in. Today's high and yesterday's high. 139.58, 139.50, maybe 139.60. You're in to the upside. Intel, it fell apart. I wouldn't do it now. AMD, yes. Intel, no. Intel touched new lows. It had to hold up at a higher low, and it didn't. So, and it's below the 50. So, IWM looks like it's setting up for a trade. Small caps making its next valiant move forward. JP Morgan, overextended. Meta, I think Meta is setting up. It's trying at least, right? The news says Intel, yeah, it said it's getting 8.5 billion. Stock's not showing any response to that though. So Microsoft looks pretty strong. Netflix grinding. Nvidia still looks viable. It hasn't, I mean, today it's pausing, but it looks like it held support and is trying to bounce. Bakar, oh, look at that magnificent beauty. Bakar had this little flag and then boom, right there. You can see your stochastics crossed right there. Your flag popped right there. The next day, what does it do? It tests your merit. This is the thing about it, right? Would I place trades ahead? No, I'm going to wait for the Fed as well at this point. What's on is on. Actually, that's not true. From the ones we saw, I think I actually would possibly take a couple of those, one or two of those. Not in the right now as we get out of the first half an hour. I think there's some viability to it. The hard part is this. If the Fed does disrupt things, you're always like, oh, I should have waited. I feel like things are going to be stable enough. But yeah, that's a tough one. I'd have to run the numbers and see, and then decide, do I want to wait or not? Picard looks great. Very strong. PLTR looks good. Volatility's low relative, but it's actually still quite high at 50. This is one that we, I think we said, I put a potential trade on this. I'm trying to do a covered call on PLTR. I'm buying 300 shares and selling 3 contracts at 22.80. This would be a trade that has the ability to make $2.20 off of a 22.80 debit, which is just under 10% in 30 days. That would tie up about $7,500 in capital. No, would tie up about 6,700 in capital to make about 660. So that's a covered call trade we looked at. It is 11 cents away from filling. 11 cents. We'll see what happens. QQQ. Still holding up above the 50. SMCI, same thing. The SPY is just kind of flat. I think we're going to see it flat all the way up until the meeting. TPR grinding, but staying above the 50. Taiwan looks pretty good too, right? I think I like Taiwan the best. Taiwan looks good. NVIDIA looks good. AMD looks good. Anybody else watching something from the chips that they like better than those three? The VIX up barely. It's marginally. We'll see what happens as we get to the Fed. If you've never watched it around the Fed, go to the SPY or go to the futures, take it to a 1-minute chart about 5 minutes before the Fed announces and watch it. Even though there's no expectation of interest rates, just watch it. It's quite interesting to see how much it can move. Yeah, so they have the announcement at 12. No, 12 for me. 2 p.m. they kind of release like the notes. And then at 12:30 he speaks. 2:30 he speaks. So about 2 minutes before the notes come out, the market just starts like getting itchy. And you can see the candles and you're like, oh my God, what is going on? And then when they actually, and you're like, these candles are so big compared to what we were seeing. And then when it actually first hits the notes, it just kind of explodes. And then it does some, it'll never go one way. It'll pull back and then do it again. And then slow down. And then as he comes out to speak at 2:30, then it reignites. It gets very interesting to watch the 1 minute charts around that time. So if you've never done it, you've got some time around 2 p.m. Eastern today. Pull it up, give it a look-see. Waste Management just did another grind higher, but it's not really pulling back, but we'll see if it does. Walmart, I think Walmart has pulled back all it's going to and maybe looking for its next trade, looking pretty strong. XBI barely hanging on to the 50-day. Basic Materials are having a very minimal consolidation, which is not great. We would love Materials to have a nice drop. Consumer services. This is what's hard, right? Is that it's holding its above its 50, but most recently we really aren't. This was fabulous back here, but now it's slowing down a little bit, and so we'd really like to see this reaccelerate and move us into this next. This is where trading is best. Oh, it was great, but right now it's a little bit more a little more difficult. Even though our posture remains strong, there's just a lot of waiting for the Fed. Energy, we don't love that strength either, right? Financial still looks good. Industrial still looks good. Technology, it's been a little iffy through here, but it's still above the 50. And overall, the trend still looks just fine. So we're hopeful. Oh, look at XLP. Stable on XLP. We're watching XLP and we're watching utilities. Choppy for sure. We're watching staples and utilities to see if we get any signs of defensiveness. Not yet, but we're open to it. Healthcare has eased up a little bit. So I don't know. It has had some consolidation, but it does look like it's trying to bounce off the 50. So I think this actually may lend a little support to some discretionary trades. Book names: Technical Analysis of the Financial Markets by John Murphy. That's one. And Technical Analysis Explained by Martin Pring. That's another. Those are two very good core technical analysis books. There's a lot of overlap though. So if you're picking up one, pick up Technical Analysis of the Financial Markets by John Murphy. Okay. Well, that's it. I think we're in a good place. I think we'll know a lot more in our next conversation after the Fed has done his thing. So let's look to see what that is. We will meet tomorrow. We did a great session on selling options. So we did buying, we did selling. Now what? Now we do both. Now we start combining it for spreads. So we'll do a presentation on spread trades on Thursday. Then we will do an application day for spread trades on Tuesday. Trading plan. Of course. I'm about to get my weekly reminder of water my bonsai trees. If you hear my Alexa talk to me, that's what's happening. Okay. Trading plan. Where are you? There you are. Risk management. That's what we're talking about. This should be well defined. You should know your heat levels when the market's good, when the market's okay, when the market's bad. You should know what your trade risk is for any system. They may be different system by system, but everything should be the same within the system. You should have a sense of how many trades you're comfortable managing. So if that becomes a limiter, if you're like, ooh, if it gets above 6, I start to get a little bit, overwhelmed. Great. That can help you to dial in. And those three should always work in conjunction with each other. You want to make sure that you know when and how you're going to adjust risk up, adjust risk down. How are you correlating it to the market posture? What elements of the market posture are going to help inform those adjustments? What are your tsunami indicators? You know, for me, the VIX is number one. I would say number two is major market analysis and sector rotation number three. This is outside, of course, of just simply, markets breaking up or down. And lastly, the last part of your risk management considerations is a little bit more overarching, which is at what point do you take a break? When do you take a break with your trading? If you draw down a certain percent, if you have a certain number of losing trades in a row, or if you just simply recognize that your mindset is not optimal, you're frustrated, you're impatient, right? You're something. That's the one for me personally that tends to shut me down, is when I'm like, I find myself in poker, they have a term for it. They call it on tilt. You're on tilt. You're emotional, you're reacting, you're right. When I play poker, I definitely go on tilt. I get pissed off, I get frustrated. My wife will watch. She would play with me and my friends, and she would laugh and she'd be like, "Oh yeah, you went on tilt." I do it when I trade sometimes, and when I recognize it, I stop and I pull out. And so, it's just a matter of connecting awareness to your mindset and saying, "Hey, should I step back?" When I say, you step back, you don't step away from the table. You still got to play. You still got to look at the hands. You still got to see the cards. You got to dial yourself back in. It's not leave. It's relax. That's what's happening. So, all right. It's good to see everybody. Tomorrow evening is next. Have a great rest of your day. We'll see what the Fed does. And as always, happy trading.